Welcome to the Mortgage Rate Weekly Market Update for the week of December 14th, 2015. Hello, I'm John Thomas with Primary Residential Mortgage, here to give you an update. Well, last week was a continuation of the roller coaster ride for mortgage rates. Mortgage rates did end the week about where they started. Take a look at the bond chart on the screen. As you can see, mortgage bonds with those black areas have been going up and down over the last couple of weeks. Rates have been moving up and down about 0.25% as we had this choppy trading. Now at the end of the week here, we saw bonds sold off. We're able to hit a bottom of support on Thursday and then rally off that support on Friday with that green candle. So with that in mind, we're going to recommend floating your mortgage rate to start the week to see if bonds can build on this momentum and rally off the support that we found this week. In order to stop this choppy trading, there's a layer of resistance to the 200-day moving average. We keep failing to break above that, so we need to break above that to break out of this choppy pattern of rates going up and down about 0.25%. So we'll have to see how things go. And in economic news, the big news last week, the stock market sold off. It was probably the worst week for the entire year of 2015. Two big factors causing the sell-off. The price of oil is at a 7-year low. That's based on a huge supply demand because OPEC failed to cut production. And then the other one was the yuan, which is the Chinese currency, is at a 4.5-year low against the dollar, and that's because China economic slowdown and anticipation of a federal rate hike coming this week at the Federal Reserve meeting. And then Thursday, we saw the release of the weekly initial jobless claims. They did tick up slightly higher to 282,000 claims, but that's still the 39th consecutive week below 300,000 claims. 300,000 is that big mark, so below 300,000 is good news, shows a strong job market. So we had two strong job reports, and we've had weekly initial claims below 300,000 for the 39th straight week. So all of that is leading people to predict that with a 90% chance the Federal Reserve is going to raise their short-term interest rate called the Fed funds rate at their meeting this week, which takes place on the 15th and the 16th. They'll release their news at the end of the day on the 16th, so that it could be market-moving news. Even though everyone expects them to raise the short-term Fed funds rate, we'll have to see what happens when that comes out. And in the local news, the next first-time homebuyer seminar is Saturday, January 16th. That's the new year, 2016. That's at the Christiana Hilton Hotel in Newark, Delaware, from 10 a.m. to noon. If you would like to register for that event, you can give us a call, 302-703-0727, or you can register online, www.delawarehomebuyerSeminar.com. Look forward to seeing you guys next week.